Good morning, my dear students. Hope all are doing good. So, in yesterday's class, we were discussing about assessment year, previous year, who is an assessee, deemed assessee, assessee in default, and who is a person and what is his income, right? So, let us continue the basic concepts of income tax. Some more points we are going to discuss in today's class. Coming to the first one, gross total income. Gross total income is explained under section 14 of Income Tax Act. So, the gross total income means it includes the 5 heads of income of a person. So, if you add all these 5 heads of income, you will get gross total income. That is, first one, income from salaries, then income from house property, income from profits and gains of business or profession, income from capital gains, then income from other sources. So if you add all these total of 5 heads of income, you will get the gross total income. See, this is a basic important point in income tax, students. Don't forget. If anyone asks which are the 5 heads of income, immediately you should tell. That is income from salary, then house property, then business or profession, then capital gains, then other sources. And you should not shuffle these points in income tax. It should come in the same order. You cannot put salary at the last and income from other source at the first. No, you can't do like that. It should come in the same order. So this is the basic concept all of you have to remember. Understood? So if you add all these 5 heads of income, you are going to get the gross total income. So, I hope you can remember the 5 heads of income, right? Salary, house property, business or profession, capital gains and other sources. Coming to the next one, total income. Total income is income of an assessee from all sources on which he has to pay income tax. In other words, it is income under all the 5 heads after making deduction under section 80C to 80U. That means, see, in previous slide, all of you saw gross total income, right? Gross total income means all the 5 heads of income. If you add, you will get gross total income. So, from that total, gross total income, if you minus the deductions, which comes under 80C to 80U, then the final answer which you are getting is called as a total income. Coming to the next topic, casual income. Any receipt which is of a casual and non-recurring nature, that is income, the receipt of which is accidental and without any stipulation is called as casual income. That means, see, if it is your salary income, it is recurring, right? It comes regularly. The income, suppose if you take a lottery ticket and if you win in that, it is non-recurring, right? It is irregular and it is unanticipated. You don't know whether you will win or no. So, such income you call it as a casual income. So, some of the examples of casual income are winnings from lottery, crossword puzzles, betting, etc. These are the examples of a casual income. Now, let's see the difference between exemption and deduction. Exemption means incomes which are exempt under section 10 will not be included while computing total income. That means, see, some of the things which are exempt from tax, we will not include it when we are calculating the total income. For example, the gift received from parents during marriage or the gift which is received by in the form of will or ancestral properties which we receive, they are exempt from tax. So, we will not include that when we are calculating the total income. Whereas deductions means incomes from which deductions are allowable under Chapter 6A will be first included in the gross total income and then the deductions will be allowed. That means, see, when we are calculating the gross total income, we add it, then again we provide the deduction. For example, professional tax. If the professional tax I have to pay, that one I can get it under deduction. But if my employer is paying my professional tax, that is an additional income for me, right? So first we have to add it when we are calculating the total income, and then we will provide it as the deduction. First we add it, after getting the gross total income, again we produce it in the form of deduction. So I hope all of you understood the difference between exemptions and deduction. Exemption means whichever which is not taxable or which is tax free, we will not take into consideration at all. We will not calculate while adding the total income. Whereas deduction means first we take when we are calculating the total income. First we add it, again later we provide it in the form of a deduction. Coming to the next topic, agricultural income. See, in India, agricultural income is fully exempt from tax. No tax for the agricultural products. Agricultural products means, you know, right? Whatever you do the activities of plowing and all, and you grow the agricultural products and sell it. So, for those agricultural products, no tax, because to encourage the farmers to do more agricultural activities. Under income tax, agricultural income is described under section 10 subsection 1 of the Income Tax Act. Law states that agricultural income earned by the taxpayer in India is fully exempt from tax. Now, what are the operations which includes the agricultural activities? That is, you have to do the cultivation of land, tilling of land, sowing of seeds, planting, weeding, tending, pruning, cutting, harvesting. Any of these activities, if you involve in agricultural activity and you are growing the agricultural products, for that no tax. It is completely exempt from tax. Let's see some of the examples of agricultural and non-agricultural income. Listen carefully. If you know this only, you will be able to solve the 6 marks problem. I will be giving a problem. Based on that, you have to tell me whether it is a agricultural income or non-agricultural income. Now, first let's see agricultural income. See, income from growing and selling paddy, wheat, flowers, trees. So, whatever you are growing in your land and you are selling it, that comes under agricultural income. Then insurance money received for destruction of agricultural produce. Suppose you have grown the crops, there is heavy rain, floods, all your crops are vanished. So for that insurance money will be paid from the government. So that also comes under agricultural income. Then income from sale of dried tobacco leaves. So you have grown the tobacco leaves, dried and sold it, that also comes under agricultural income. Then income from sale of straw. Sale of straw means, see, when you grow this rice, wheat and all, when you take out that crops, the dried grass which you remain, no, that grass also you sell for cows, sheep and all, for their grazing, right? So that is called as sale of straw. Then income from growing and maintaining nursery tea leaves. Nursery means you all know, no? Small plants they grow and they sell it, or tea leaves. All these are the examples of agricultural income. Now let's see some of the examples of non-agricultural income. Income from sale of trees, grass of spontaneous growth. See, in agricultural income also, first point you can see growing and selling trees. Here also you can see income from sale of trees. Now what is the difference between that and this? See, here they have mentioned the word spontaneous growth. That means in your agricultural land, if there is any growth of trees or grass, spontaneous, that means you didn't put any effort. It is grown in its own. So when you didn't put any effort, when it is grown by itself, and if you are selling that grass trees of spontaneous growth, then it doesn't comes under agricultural income. That is why it is called as non-agricultural income. Then income of salt produced by flooding the land with seawater. By using the seawater, if you produce salt, that is not agricultural income. Then interest received by money lender in the form of agricultural produce. If you have given money for some other person for interest for agriculture, even that doesn't come under agriculture, it is non-agriculture. Then income from butter and cheese making. You know, butter and cheese making is from the milk, that is dairy farming, so it doesn't come under agricultural income. Then poultry farming. Poultry farming means growing the hens, sheeps and all, even that doesn't come under agriculture. Then fishing. Then land let out for storing crops. If you have given your land for someone else for storing their crops, then dairy farming. Then loan given to a farmer and you receive a rent interest from that. Then if you have engaged in some company of agricultural operation and you receive dividend on that. So all these are non-agricultural income. So you have to easily find out agricultural income means what, non-agricultural income means what, after writing and reading these points. Okay students, we have come to an end of the class. Listen carefully and write down the notes of today so that tomorrow you can solve some 6 marks problems.